What about from the perspective of investing in an operator who is using like preferred equity to do deals?
Yeah.
Right? Is that something you look at?
Yeah, good question. I normally don't invest when there's preferred equity. I actually have invested in preferred equity several times in the past, but they've been nothing of what anyone here is probably thinking about. It's been highly unique situations, and I can give you some examples, but nothing to do with equity, preferred equity, cumulative loan to value. It's been totally different. It's been shorter term, like bridge type scenarios on very unique situations where the risk reward was really fantastic, and not at this timing of a cycle. So generally speaking, the reason why I don't look at preferred equity stack, or at least being in a deal that has preferred equity stack, is because I am most comfortable in the 65 to 70% loan to value. At the right timing of a cycle, like beginning of cycle, I could go up to 75, but I'm most comfortable between 65 and 70. And normally what the pref equity is doing is it's accomplishing one of two things for a sponsor. It's either increasing the total quote unquote leverage. It's not real, because preferred equity is not real, technically debt, but what I call the cumulative loan to value of the deal that's ahead of the equity. So it's increasing the risk because it's increasing the total amount of capital that's ahead of you as a common equity investor, or it's basically maxing out the leverage, or it's providing which was happening in the 2018, 19, 20 era. It's providing a cash flow return to investors that's attractive enough to get some more equity in deals that otherwise wouldn't be able to provide on the common equity side. So it's almost like a fundraising technique, so that because the sponsor doesn't think they'll be able to raise it all on the common side. And when that happens, you're increasing risk on the equity, the common equity, because you have that higher interest rate ahead of you, right? And to me, when you're in the pref equity side in that scenario, you're not getting compensated commensurate for the risk, because if you went in the common equity with no preferred equity in the stack, you'd actually have a total higher return, total average annualized higher return, like you mentioned before, Dennis.